despite numerous efforts of the government of India to promote growth and liquidity in the country over the last few months, still the corporate investment in our country is very, very slow. The recent data of June 2025, released by the Index for Industrial Production, has showed the industrial growth in the country just at 1.2%, which means Index for Industrial Production growth fell to a 9-month low of 1.2% in the month of June 2025. And alongside this, several other outcomes in relation to slow corporate growth, weak industrial activity, and high unemployment rate have also raised the concerns of several investors, several economists, and several experts in relation to the way our economy is moving forward. Now, if we look at it into perspective, you have to understand that in the last 6 months, both monetary policy and fiscal policy, monetary policy of the RBI and fiscal policy of the Government of India has introduced several changes to boost economic growth in the country and also to promote liquidity in the hands of general public. Now, whether it be higher capital expenditure, that is capex to the tune of 11 lakh crores introduced by the Government of India in the recent budget, or whether it be the cut in the repo rates, the cut in the CRR cash reserve ratio by the RBI in its monetary policy in the last few months, the aim of both the policies is to ensure that Indian economy becomes developed by the year 2047. But the recent data of the last month of Index for Industrial Production shows otherwise, and it shows a sluggish growth in relation to industrial growth in our country, in relation to investments in our country, especially private sector investments. Today, we'll be trying to understand and trying to go through this whole topic of how investments can impact the economy and where our current economy stands and what is the Index for Industrial Production data showcasing about Indian economy in reality. All the questions we'll be trying to answer in this particular session. Hello, my name is Preetpal Singh and you're watching Perspective. Now, when we talk about corporate investments and the corporate investments being sluggish in the economy, first we have to understand that why corporate investments are necessary for any economy altogether. Now, firstly, I will tell you theoretically, then practically. See, theoretically, if we see when we calculate GDP through expenditure method, we usually have 4 components of expenditure method. One is consumption, second is investment, third is government expenditure, and fourth is net exports. Amongst all of them, the highest is the consumption expenditure. But one more component which is related to the consumption expenditure is investment. Now, this investment portion includes corporate investments as well. Now, if investments in the economy are sluggish, it can directly impact the GDP of the economy. If it directly impacts the GDP of the economy, it will impact the GDP growth figures as well, which in reality is not very high for our country compared to where it should be at this particular point of time. Now, this is theoretically that weak investments, poor investments leads to lower GDP, lower economic growth, and where the economy would not grow further. Now, practically speaking, slow industrial growth showcases weaker employment trends in the economy. It showcases weaker demand in the economy, because why wouldn't private sector invest? Even though private sectors in our country are incentivized to earn a lot of profits, over the last 10 years, we have seen the number of billion-dollar valuation companies, that is unicorns in our country, multiplying in 10x numbers. Even still, let us take the case that many of the companies are loss-making and their valuation is more than $1 billion, but still a lot of traditional profit-making companies in the country, they are withholding investments in the country, and they are not putting a lot of money as investments, and they are sitting on a huge piles of cash but not wanting to invest. One reason for this is weak demand in the economy. We have to dig deeper and we have to find why foreign investors in the country also are pulling back their investments in stock markets of our country, which is why the Sensex and Nifty of our country went down a few months back, because the foreign investors, they took back their money from India and deposited and invested the money back into the US. So while foreign investors are pulling back their money, corporate investments in the country are dying, are very abysmal, and corporate investors, they're hesitant to invest in the economy. It just highlights one thing: weak demand, slow demand, people not having the money. See, you have to understand one thing. Investment decisions are based on profit motive. Even if the companies are earning profit, still they are not putting investments. Why? Because they feel and they observe that primarily their investments are driven by the market demand. And despite huge reforms, despite higher profit, if they see that the demand, the products is not there in the market, what would they do? By investing. Rather than investing, let's secure the money, let's put in the financial market, let's put in the stocks, let's put in different portfolios, but why to invest? So the problem which is highlighted till now is a lower demand, a lower consumer demand. And definitely this low demand hurts business confidence, and also without demand, a firm wouldn't be able to sustain and there would be poor returns to the firm, which is why they won't want to invest. And this is not just the case now. It has been a similar trend in the last many years as well, which is why if we see corporate investment to GDP ratio in our country, in the last few years, it has been hovering around 12%. But if we see the years of 2004 to 2008, it was as high as 16%, which means from those years, 2004 to 2008, till this year, 2022, 23, 24, 25, where the percentage of corporate investments as a percentage of GDP should have gone up, it has come down. From 16-17%, it has come to a meager 12%, and some years even less, which shows a significant declining trend of corporate investments, not in numbers, but in percentage. Also, the similar thing was highlighted in this year's economic survey as well. The economic survey of 2024-2025 highlighted this very particular problem, where they said that the corporate balance sheets, they are showing positive results, they're showing good trends, they're showing good profits, and they are very, very strong. But still, the hiring and wages have not kept the pace. Which means that the hiring of the new individuals for the companies and the increase in wages of the individuals, of the employees in the company, has not kept pace with the balance sheets. This simply highlights one particular fact. While there has been increase in profits, there has not been increase in employment, there has not been increase in wages. You see major companies like Infosys, TCS, Tata, different other corporate players as well. Their package is 3.5 lakh rupees for a fresher, 3 lakh rupees a fresher, 2.4 lakh rupees a fresher. Is this amount enough to live in a city like Delhi, Bangalore, Gurgaon, Noida, any other place? The answer is no. And there are many individuals who are not even getting an increment of 10% every single year. While the inflation in the country is going at 5 to 6%, they are not even getting an increment of 10% every single year. And many of the employees in edtech startups as well, and different other startups as well, you see their salaries being static over the last 3 to 4 years. Salary is not growing at all. They are working either in same salaries or in multiple places there are salary cut. So many of the corporate employees, they're directly given a choice that either we will fire you or we will cut your salary. So the question of raising the salary does not come into play anywhere. And this is the very reason economic survey highlights that there has been a lower demand. So demand has been hit because of the consumers in the market has been hit. And consumers are hit because the employees are hit. Because employees are no one but the consumers. So this simply means that there have been subdued consumption in the economy, while the private corporate players, they're enjoying huge profits. Till now, we have only discussed about the corporate investments. If we see about the public sector investments that is by the PSUs or by the government, that number is still very high because the government is able to afford investing to the public because government has no other work to do. Government does not run on profit motive. Government runs on the motive of social welfare, which is why they're okay to invest. And their investments are huge in the economy, whether it be the 11 lakh crores for the capital expenditure or whether it be different other schemes launched by the government to induce investments in the economy. Government is wanting to invest. Other than that, government is also motivating the private players to invest, the corporate players to invest as well, but corporate players are hesitant in it. So the real logical question here are 2-3. First is, what are the measures taken by India to boost corporate investments in the country? Because other than that, the government expenditure, the government is already doing. But to boost private investment, what the government is doing? That is the first question. And whatever the government is doing, other than that, what government can do further in order to enhance the corporate investments in the country? Can the government do, or should the RBI come into play and do and take certain measures in order to boost the corporate investments? What can be done to solve the situation? That is the question we'll be trying to answer. See, one thing is very, very clear. There has to be an external stimulus. Internally, if we think that corporate players would realize and they would start investing in the economy and we would become a developed economy by the year 2047, that is just a dream. The World Bank report has very clearly suggested that if we want to achieve high income level by the year 2047, we have to at least grow by 7.8% every year for the next 22 years straight. So for the next 22 years, we have to grow by this 7.8%. If we do not grow by that, we won't be able to become developed by the year 2047. And for that, public and private investments in the economy should at least reach 40% of the GDP, which currently is just 33% meager. See, the government over years, I've already told you, have increased the spending. Also additional to that, the government has also cut the corporate taxes as well, so that the government is telling the corporate players that we are cutting down your taxes, please invest into the economy. Don't withhold profit with yourself. Rather than that, try to invest most of the profit again into the company, into the economy. So from 30%, we have cut down the corporate tax in our country to 22% to stimulate this investment, corporate investment in the country. But still the result is abysmal, still the result is poor. A very famous personality and a business tycoon, Uday Kotak, has also highlighted concerns and put concerns forward in relation to India's fading animal spirit. He also urged the business owners who has inherited the companies to build new businesses. So what he says is that the people who have inherited their businesses from the parents, they're not building new businesses. So he has urged them that please build new businesses rather than sitting tight and managing their existing wealth. You don't have to be wealth managers. The next generation, rather than being the wealth manager of their parents or their ancestors, they should be the ones who will be increasing the wealth by opening new businesses rather than just investing whatever the money which they have. Because with this, you will just become a wealth manager, not an industrialist, not a business tycoon, not a businessman. Okay, one data you'll be shocked to know. There's an investment advisory known as value research. It shows that India's non-financial businesses which are not involved in finance, we're not talking about finance-based businesses, the non-finance-based businesses in India are sitting on a cash worth 11% of their total wealth or total assets, which corroborates the view that the companies are not spending enough or not investing enough in making fresh investments. 11% of the total assets is a very huge amount. And for a non-finance based business, for a finance-based business, it is understood that they have to keep a lot of cash stock. But a non-finance business, 11% of the total asset as cash simply shows their reluctance to invest into the economy. Now, to answer that earlier question, that what has the government done? So I've already told you, government has reduced the corporate tax from 30% to 22%. Corporate tax in our country has come down. Even when there was a lot of uproar from the middle class, still the government did that to boost the corporate investments. Other than that, government came out with the public, production linked incentive scheme, PLI scheme. Now, this PLI scheme was also very integral, but recently the government announced that we are shutting down the PLI scheme because of not the returns which they expected did not come from the PLI scheme. So they're shutting the PLI scheme down. Other than that, for faster decision making, better permits and all those things, the government announced PM Gati Shakti program as well. That is also going on in full swing. Other than that, a lot of infrastructure projects, whether it be National Industrial Corridor program or transit corridors or dedicated freight corridors being created by the government. And other than that, opening FDI limits for different sector and humongous ease of doing business reforms happening in the country, especially the coming up of the insolvency and bankruptcy code. All these are there to make sure that it is healthy and good and easy for businesses to run in our country. And if we are making it easy for them, we definitely expect the businesses, the private sector, the corporate sector to invest back in the country, to invest back in the economy rather than withholding the profits as retained earnings. The question is how this will be solved. See, this will be solved by curing the problem. And I told you the problem is that the corporate sector is not investing, but why they are not investing? Because of the sluggish demand. So the government first needs to correct the demand. Now, in the recent months, the government has tried to correct the demand by reducing the repo rate, by reducing the CRR, so that people take more loans. But still, why would people take more loan if the overall demand is less? Right? Which is why what we need to ensure is that we need to provide education skill to the public. If public is skilled, public is educated, they will be employed. If they'll be employed, they'll be able to have more opportunities to earn. If they'll be having more opportunities to earn, they'll be able to have a better disposable income. If they're able to have better disposable income, they'll be able to demand more. If they demand more, corporate investments would be showing a positive sign and they would be investing in the economy rather than withholding the money. Which is why job creation by the government is required. MJ wages should go up. Other wages the government provides, other subsidies the government provides should also go up. Government should promote this artificial intelligence transition. This creators economy, which is booming a lot these days, creators economy should be supported by the government because very less investment is required in becoming a creator. And overall, government should try to enhance corporate confidence in the economy by making sure that the policies that the government is implementing for boosting domestic demand are favorable for the public and are outcome based. If that is known to the corporates, corporate confidence will be created and corporate would directly invest in the economy. You don't have to say anything to the corporate people. So overall, India's economy, which has surpassed $4 trillion economy mark, soon we are to be surpassing Japan to become the 4th largest economy in the world. We also need to ensure that while these things are going on, we have to keep that 2047 mark in our mind. We have to work in a mission mode in order to ensure that all the things in relation to the corporate investment, the public investment, the domestic demand, consumption expenditure, the net exports of the country, alongside the government expenditure, it all grows so that the GDP should go up. While the GDP is going up, economic growth is important. Economic development should also take place, and literacy, healthcare, education, social security indicators should also be improved while we are focusing on the numbers. So just the numbers are not our concern. Standard of living of individuals in the country should also improve so that we also go up in the purchasing power parity and we also go up in the per capita income index also, whereby for an average person, the living standards are improved than before and they're able to afford more commodities than before and their living standards go up. I hope you gained a new perspective in relation to one specific point, that is corporate investments in our country. What are your suggestions to boost corporate investments? Do let me know in the comment section. I'll be very happy to read them. All the very best and have a beautiful day. Thank you.